What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 14th, 2023. If that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, a lot of really interesting information. If you did check out uh, the weekly update, and you've been essentially following me at Hemi137 on Twitter, I've been putting out updates just about every couple of hours, essentially since yesterday, and trying to give insight into really what's been going on. There's been a lot going on. And so the SVP thing, I'm sure everybody's heard about it, in that it's essentially caused all banks to get halted this morning. But nonetheless, short story is they weren't able to essentially cover their debts. So that's essentially what happened last week. Apparently, they knew about it in December. The CEO started selling shares. A lot of the senior executives were selling shares 2 weeks prior to what happened last Thursday. Essentially, coming and understanding they couldn't essentially cover the debt. And so with everything else, and understanding that they had to hold bonds to maturity, that they had no liquidity to be able to pay off their debt. And so this brought into question a lot of different things coming into the weekend. It's been a crazy, chaotic weekend of the Fed. The Treasury, and the FDIC got together trying to create a tool for a backstop, essentially trying to fund any bank that may come in essentially in line with the same issues. And so Signature Bank was also another bank. I don't know if it was over the weekend, but they were another bank that essentially got closed down. There's a lot of banks that are in discussion that could be potentially closing down as well. There's people talking about that quite rapidly. And the funny thing is, you come into today, there hasn't been hardly any news, and this is exactly what's happening. But you had President Biden come out and say your money is safe, blah, 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 blah. It really doesn't matter what he says, because it's all BS. We all know there's the true story. And this is something I try to emphasize, is that there is always an underlying true story to things, and you're only going to get what they want you to hear. And that's what we're getting today. And the funny thing is the press secretary keeps reiterating the same things. It's not going to affect you. This is not 2008, is all she kept repeating over and over. Every time she got essentially a breath to put in, that's what she put. This is not 2008 crash. Your money's safe, your money's safe, your money's safe. They don't want people pulling money out. The question being is that if you pull money out, right, that collapses the bank. That's what essentially the banks make money off of, is holding your money. So if you pull money out, there was big talks about big bank runs going on today. I didn't really see any news about that. But one thing to keep in mind, I am recording this a little bit earlier. So after hours tonight is going to be really important, because that's when the news is going to be released. They aren't going to release news during the day with stuff going on like this, because it's a financial crisis that we're going through right this second, the black swan that I've been talking about. And so we've heard about this overseas, but it's happening to us right now. And so this essentially this black swan event that's going on, there hasn't been any news release. You had Biden this morning saying the same thing, press secretary saying the same thing. Not 2008. This is exactly what happened in 2008. Is we hit interest rates, I believe it was roughly around like 5% to 5.25, and then the same thing happened where stuff started to break. They had to dial back, and then the market crashed. This is the same kind of setup we're getting into, because this backstop, they don't want to call it essentially a bailout, but it's essentially a bailout is what it is. Nonetheless, and that's another thing they kept reiterating, this is not a bailout, this is not a bailout. No, it is a bailout. Nonetheless, Yellen was saying there was going to be no bailout, but yet there's a bailout. We'll just repackage, just like the whole recession thing. They'll repackage the wording and say it's not whatever. It's not a soft landing. It's not a hard landing. It's just not a landing. Okay, well, stop reiterating words and depicting words, right? And give us the truth, right? But you're not going to get the truth because you don't want to cause panic. So with that being said, this is what is currently leaving us to tomorrow. Now, tomorrow is going to be a huge day. You do have the core You have core inflation tomorrow. It's something we've been kind of waiting and anticipating for, especially for non-farms. But the whole bank fiasco is a huge black swan that everything sits on, our economy sits on, is currently at risk. Now, what we have to pay attention to here is the fact that okay, now they have a backstop, so the market pumped a little bit from that, but that's not going to solve the issue. There's still a huge issue here at hand right now. And this is something that's funny because one of the reporters was asking the press secretary, okay, well, what about other banks? What if other banks start essentially faulting on their debts? Can you cover them? And she was kind of like iffy, didn't really want to touch the question, kind of thing. And let's skate away from the question. We're not going to take the taxpayers' money, but we'll use the fees. And the fees aren't as much to cover a bunch of banks going under. That's the problem. This has happened before in history where we've had a backstop for the banks. It didn't work. Shit crashed. And then essentially we had to create another backstop. So this is the problem that we have. And they keep reiterating that they have to print money for this thing to be able to work. So yes, you won't pay directly, but you'll pay indirectly for having to pay for this, either through inflation is essentially what you're saying, that we're going to dilute your dollar. So yeah, you need more dollars to pay for this basic necessities you need because we're trying to bail out banks. That's what's going on. And so nonetheless, this is not over, right? There's a huge issue going on right now. So going back to tomorrow, we have the core. The core was a big event. At this point, they're predicting that there will be no rate increases on policy. You have to understand that a lot of the movements that we've had up to this point have been based on essentially future projections on what's going to happen when there's monetary policy, core, and stuff like that. Core, I believe, is going to be higher. I believe the predictions, let me pull that up real quick for predictions for the core tomorrow. So what we're projecting for tomorrow is core inflation is they're guessing it's going to come in at, the consensus is 6.1, previous was 6.4, consensus is 6. I hear a lot of people thinking we're going to get the biggest decrease in inflation tomorrow. And Powell's already made comments about this, that inflation has spiked up a lot more than anticipated. People are trying to calm down the current situation, especially with the banks that are going on. This is why a lot of news is diverted till after hours, after the market's closed, because if something comes out, it can absolutely crash the market. And this is what's happened. Since what's happened with the SVB situation is now we're in a crash scenario. We aren't just in a like tumble, we're going to slowly guide down type of thing. We're more so we're going to crash 200 points and then we'll recover from that point. Is the kind of scenario that we're currently in. It's not so much, again, like I said, we're just going to grind down like we have been essentially almost all year last year. This is more of a crash scenario. And then if the big thing is if they really don't raise rates, now this is something you really have to think about. What if they don't raise rates? What if they go along this thought process? Okay, well, the banks are breaking. We were going to push this as far as we could until something broke. Well, the banks are breaking. So we stop raising interest rates. We hold them where they're at. Okay, well, what if inflation jumps back to high sixes or even sevens? Powell is going to have to make a decision. Does he continue to increase rates or stop raising rates? Because if he continues to throw on interest rates, that means he doesn't care. It's essentially going to throw off his whole, he's going to lose all respect is what's going to happen. Because if he continues to do that, right, more banks are going to start to crumble. And you have to understand when they do a lot of the stress tests too, something they don't really consider or really gauge is people going on bank runs. Bank runs haven't happened in forever, right? Bank runs are essentially when a mass amount of people go to the bank and they want their money. But there's something you need to keep in mind. You can go to the bank and pull your money out, but you have to understand the system in which uses that money. If that breaks, it's not going to matter if you have cash or not. So what's the consensus of really pulling out your money and then in hopes that things will get better? One of the best things to do and understand that if you got a brokerage account, again, not financial advice, but if you have a brokerage account, you have double insurance essentially on your your brokerage account as opposed to a savings account. You typically get a lot better interest rates as well in a brokerage account because it's being held by the Fed. So you get FDIC plus I can't then remember the other name of insurance that's on top of your head, but essentially covers 100 million as opposed or 100 million, I think it is, or something close to that, compared to what you're just getting the 250 from essentially your FDIC insured regular bank that's out there. So that's what I've done for a very long time. Again, not financial advice. I just advise that'd be something you should look into. Nonetheless, with that being said, this thing is not over, and we're going to think we're going to pivot from here is concerning because of the fact that I'm all for, again, things getting better. They need to get better. Is this going to be it that makes it better? This makes things worse. You need to ask yourself, why would the Fed, the Treasurer, FDIC spend a weekend to come up with a new tool to backstop the banks? In such a fast pace, as slow as the Fed is, why would all of a sudden they be throwing this together? So what, Monday, to try to stop panic? If you haven't noticed, there hasn't been a lot of news that's been going out. It's been very quiet on that front. Now you're probably going to get a lot of questions and stuff like that. You're probably going to get a lot of stuff after the fact tonight, but things are in a very, very, very bad state. And so, being said, we're going to have the core tomorrow, and then we're going to see what happens from there. Again, you're going to put the market in an absolute frenzy if inflation is in the high sixes or sevens tomorrow. There will be, I wouldn't be surprised if there was a crash. Now, I hate saying crash, and it just doesn't crash, but logically it would crash because now you can't raise rates or it's going to break the banks even more. And you got inflation that could potentially run away. Now, there's another option here too, and thinking that, well, even there could be a potential of deflation if a number of banks actually crack and start breaking, right? So that could lead to some deflation. So there wouldn't be inflation there, but it just depends on how things play out. This is something I've talked about all the way up to this point, and essentially what my channel is based on. You have to be aware that things change all the time. It's not just black and white. It's not just going to go up. It's not just going to go down. There's a driver behind these things. You have to know what's pushing it, and essentially this way you got to have like an idea of where the market's going and why it's being driven up that way. So again, very, 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 very nasty situation we're currently in. So as you can see, things are quite complicated. The whole dynamic and structure, especially of a lot of the things I talked about, has completely morphed into something else. Now we got concerns of the banks, and will the backstops hold? Is the question. It's very sketchy, essentially, on what is exactly paying for these banks, and I don't see if there's a lot of these to occur. That it's going to lead into a huge problem that can be backed. I mean, you could try to continue to print money, but now you're adding to inflation. And so that is the problem. And so even though you aren't directly, the taxpayers and directly paying for it, they're paying for it through inflation. So nonetheless, that's where we are. We wake and we see tomorrow. Now, the interesting thing is the core is it's at 7:30 Eastern Standard Time, so it's an hour earlier than normal, which is interesting. There's these small adjustments that the Fed, the administration make to try to potentially fix the market, and I think it's primarily because you can essentially start trading pre-market at 7 o'clock. I think if there's any kind of unexpected numbers that could potentially be coming out, that maybe the market will try to adjust and potentially close, because it's something that can happen. They can close the stock market if things, right. It's something that we came very close to during the pandemic. I think it actually happened at one point. Again, limit downs. If you get 3 limit downs, essentially if the index moves 7% in a day, it's the limit down. The index gets halted. And if you get 3 of those in a day, essentially it'll be closed for the rest of the day. And we did get one of those, I believe, during the pandemic. We limited down 3 times in a day, and then we closed Pretty sure that's what happened, or we came very, very close to it, from what I remember. But interesting times nonetheless. This is very interesting because, again, as you can see, as I'm talking, the market is starting to sell off here. I am, like I said, I am recording this a little bit earlier, so we are dumping towards the end of the day. Again, in anticipation for tomorrow. Again, the pop today, I think very, very misleading in a lot of senses. Is that there's a lot of people out there that would agree uh, that this backstop is not a good idea. Things will still go to zero. The banks will still get crushed. And so the only way they can alleviate that is by laying off rates or not increasing them anymore. But again, you better hope that inflation comes down. And so yeah, I've noticed even since this morning, those numbers have been adjusted to what they were. I think it's was 6.2, and then now they're saying 6. So they've adjusted it a little bit even since this morning. And again, they don't believe that there's going to be any kind of increase on the next monetary policy. So tomorrow will be quite interesting, nonetheless, on what happens. So we wait and we see, and then we go from there. So that's what we have in there as far as like technical wise. Again, we're watching roughly this 3,900 for the top side. Bottom side, you got support at 3,800. The real question here is, though, again, it's not going to matter. As I've talked about the 3,800 coming right in and looked at it, nailed at 3,908, came pretty close. Nonetheless, I said we would hit this area before core, and we sure did. It just took the financial banking system to completely fold. So again, tomorrow, watching 3,800. If we get a bad core, this thing's going to break, and we're going down to at least 36. Yeah, you do have some speed bumps here that could potentially hold the market up briefly. But again, if we get a bad core on top of everything else that's going on, again, this thing is just going to absolutely tumble and it's going to get crushed. And we are also coming into a options weeks. There's going to be a lot of extra sell pressure as well on top of what is already currently going on. She have options expiration this week as well. So there's a lot going on this week to be very mindful of moving forward. But the problem is, again, you can't really play the index because there's got so much priced in the index already. I was looking at options this morning, and options were absolutely absurd. The amount you had to pay for options today for on the SPX. It's not saying you can't play other ones like Tesla and some of the other bigger movers as well. Their options are still aren't priced too bad, but SPX is definitely, there's a lot priced in. So you need the stock to drop like 100 points for it to really even break even on some of these options. And so that's why in times like this, you don't really play options. It's and right, a lot of banks will change with options and stuff like that. So they price in a lot more on big event weeks. So we'll see there. Now the dollar again actually almost got reset here with this whole the bank scenario. And again, this is mainly based off of projections that we may not be increasing rates. That's the case. It's great the dollar could come down, but again, you're going to have inflation. If the inflation report's hot, this thing can pop right back over. Especially if it gets back in the sevens, this thing will move back to 106 tomorrow, and then it will go into monetary policy and see where it takes from there. So but the dollar, again, still holding support roughly. It needs to hold roughly the 103. If it breaks that, and we're back down to the 101. But it needs to break above. I thought we would have broke above here, but then you go right here, you got the essentially you got the bank SVB on Saturday, so it kind of messed everything up. Or on Thursday, so it kind of messed everything up. This is exactly what happens. This is how black swan events, like you have everything going on, and the black swan event occurs, and it just changes everything. And then you have to go based off of that. And right now, it's very unpredictable what's going to happen. And somebody say the wrong thing, and the whole thing's going to come crumbling down. Especially when you're talking about the banks, right? The infrastructure in which the whole economy is based off of. So So we're in for a wild ride. To think you can't really go up or down at this point, right? We can come into some really low inflation, which would be really crazy if it did. And it's not saying it couldn't happen, but if we do come in a really low inflation tomorrow, um, where this thing could start rocketing up. And would it make sense? No, not at all. Why would we be in such a panic to back banks? Is that is my question. If you think everything is so hunky dory, why are the banks? Why is Powell, the Treasury, and FDIC? Why were they in essentially emergency meeting over the weekend to try and fix this to create a tool to back the banks? That's what you need to ask yourself. If things are so okay, and I've always stated, right, like the economy and what's going on in the stock market are two completely different things. But you have to understand that moving forward from this point, you are on such shaky. It was shaky before, but now you're on really shaky ground because some of your banks have already failed, and I mean like truly failed. Right, they've been labeled by FDIC as being a failed bank. This is what we need to be mindful of moving forward. So we'll see. Again, this is really going to be based off a core. So once we see what we get tomorrow for core, you're going to get some wacky movements tomorrow. There's going to be some really big moves tomorrow. Nonetheless, even if we come in roughly at close to 6.4 like we did, I think the market's still going to go nuts because it's not coming down, right? We're sticky inflation and banks are breaking, right? Well, something has to be done. So that's the issue there. Bitcoin, again, Bitcoin, big rocket just because of the current market sentiment, right? This is why Bitcoin was created, was because the banks and what they were doing back in 2008. And so we're getting the same type of scenario. Nothing's really changed with the banks. The banks have always been the same. They're leveraging money out that they don't have, right? And so now this new tool, quote unquote tool that they have, essentially compensates for all the debt that they have, and you can still borrow against that debt. It's essentially saying that debt doesn't even exist. You can still borrow against it. So really, what does that fix? It doesn't fix anything, right? And so it's just some fancy terms and some papers to make it believe that it's okay when it's really not okay, right? And so that's what I'm trying to emphasize here is that there's still a huge problem right here, and they're trying to fix it. And you have to understand the debt ceiling again is just right around the corner. So once you get off of one really bad sticky topic, you're going to go right into the next really bad sticky topic. And if that doesn't get to fit, then we default on our debts, and then we're going to lose credit scores, and that's going to knock us down really low, right? And so you have to understand there's all these different things that could cascade into something bigger and bigger and bigger on top of what's already happening. And so we were waiting for something to break. Now we have the banks that are broken, and do we continue to put full court press on it and continue to break stuff, or what do we do from this point? And that what comes out of Powell's mouth next, right? They have a blackout period right now. This is completely normal. They do this before monetary policy every week. So I know a lot of people were talking about these secretive meetings. They do it from time to time, but you have to understand, again, before monetary policy, they have a blackout week. So this is normal, right? This isn't no secretive stuff. This is what they do all the time. They have a blackout week, and then they go into monetary policy, which is next week. So just be mindful of that. But Bitcoin, again, this is why Bitcoin was created, and you got a huge pump out of it because banks are failing. So we'll see. We'll wait and we'll see. But I think this is, I don't think this is Bitcoin's time. Even looking at Bitcoin's halving, you still got a long time before that next bull run. It's not saying that I do believe Bitcoin. I do believe AI will lead the way on this next circulation or bull market that we do get in. I don't think it starts now. You need things to break. Once everybody realizes that stuff needs to break, then we can pivot. Is this break with SBV what we needed? It doesn't seem that way because they aren't treating it in that fashion. We haven't had a grand break, right? Like we had some emergency stuff go on, and yeah, people are running around trying to fix stuff, but we haven't had that yet. That sell-off hasn't happened, right? Like people think that we're just going to pivot and that's going to be okay. But tomorrow, if we get a really bad inflation report, then you start talking about potentially hyperinflation, and the last thing you want to do is you're paying for $300 for groceries this week. You're going to pay $600 for groceries next month, and then $900 for groceries for the same exact groceries 6 months from now. That's hyperinflation, right? This is something we are trying to avoid. So let this play out and let this thing break to be able to do that. If you continue to press it and try to lay off rates and no, we need to start a new bull market, things need to normalize. These cycles are normal. They need to happen. If they don't happen, right, you're to try to be able to afford anything is going to be it's just not going to happen, right? You're going to be in a very bad situation and just it won't happen. So again, the next couple of days are going to be extremely critical, particularly tomorrow. We'll definitely set the ground rules for what is the next move. And then after tomorrow, I'm sure we'll get tons more predictions. We have the PPI on Wednesday. At this point, it doesn't even matter. I really didn't think it was going to matter anyway, but now it really doesn't matter because now it's okay. Well, what's the core at? Is the core at least coming down? If it's not, can we lay off rates? Is that even a possibility? Is the next question we're going to have. So Tesla had a little bit of a bump. Everything is kind of just you can say dead cat and bounce. It's just a relief bounce until we get more data, and I think that more data is tomorrow. Once we get the core, then we need to really decide: can we even talk about not putting on rates, or we're going to continue to push this thing a little bit more and see what happens if we push it up a little bit more? Does it break more banks, or what happens from that point? I think to some extent, I think Powell wants to push it a little bit more and see what happens and see how far outside. You have to understand that if they stop applying rates, everything that Powell has done to this point is irrelevant for him battling against inflation. And that's the concern, because now everybody's going to go back out and start purchasing stuff that they can't afford and drive prices up even higher than what they currently are. If you haven't noticed, the amount of price gouging that's going on is absolutely absurd. And then understand that, okay, now what's going to happen is that people are really going to start price gouging because interest rates are coming down and not going up. And so you can see where this is going to get really nasty and cascade and branch out and butterfly into some really nasty shit, right? So Tesla, we'll see here, but top being essentially the 178. Again, if Tesla breaks, I'm really watching this. I'm not really watching the upside here, but if Tesla does break the 164, again, you got a huge drop down to 140. I want to start accumulating Tesla potentially around 140. I really like 100, but the 140 mark, we'll see. Again, I think this last down push, if we do get a last push here, will be the one. We're starting to see stuff break, right? This is what we wanted to see. We wanted to, not that it's a good thing, but we wanted to see something to break for things to start turning around, to pivot. And people were too much premature to pivot when stuff wasn't actually broken yet. And so again, I think it's all heavily dependent on what comes out tomorrow. But again, I think this thing can break and sell off pretty heavy, at least down to 140. And then we'll see what happens from there. NVIDIA, again, still holding very strongly up here. I still think it's going to eventually fill this gap. And if it does fill that gap and break the 208, again, you're going to get a pretty deep dive, at least roughly down to 180, I think. So we'll see what happens there. BA is still kind of in a holding pattern, but essentially holding the 205 down to the 195. So watching that. JPM, it's barely holding the 130. As long as it's going to hold the 130, it'll be okay. But again, I think it's going to break and fill this gap, at least down 50% of this move. So you're looking around the 120 mark. So looking at this thing really drop. Again, if that inflation is really high tomorrow, I see this really dropping pretty heavy. Goldman Sachs getting absolutely crushed, actually made up for that parabolic move already. This is what I'm talking about. You have parabolic moves, you're going to get one of these moves. That's what we've got. And this thing is continuing to just sell off. Backstop for this is around 293. So watch for that for Goldman Sachs. Bank of America, same thing. That's been struggling. One of the big four. Just nothing but selling off. Limit down, limit down, limit down. So we'll see what happens tomorrow. Tomorrow will be a very, very big day. Like I said, the dynamic of the market has changed. It is not the same anymore. It is not the same market we had last Wednesday. This is a very different market we have. You have to understand that and understand that it's not a good sign. This is not good to pivot. You pivot out of here, something is going to break even worse. And then the last thing you want is you don't want a bank run, even though it doesn't make any sense, right? Again, pulling cash out for a system that's broken doesn't mean anything. Why would you do that? So leaving it in there at least gives the banks an opportunity. I'm not saying that they need an opportunity, because they pretty much blow that every time they get the opportunity to shine. They always fail. So nonetheless, just know of a different plan for your money, right? And this is why around this time, a lot of people will pull money out and purchase a lot of assets, so that if something does happen, that they get better security or better insurance on their money, as opposed to just holding on to straight cash. No, I say I do hold on to cash, but I have a lot of investments accounts that I use. So nonetheless, again, not financial advice. What we go and we see from here. Again, tomorrow's going to be a huge day, so just be prepared. Be prepared for anything. It could go up just as easy as it could go down, right? If we get a very low inflation, that could actually cause a pivot. And then be ready. If that's the case, be ready to strike to the upside if that's the case. If not, if inflation is extremely high, get ready for potential big downside. So that's something you have to be mindful of and be wary, because it's very much a possibility. It can go both ways, and that's what I try to teach and preach here on this channel, is that you have to be adjustable to either way, because you can get a black swan event that changes the dynamic of everything. And we got that last Thursday. We have to see how the market's going to take it. The market's trying to still digest what happened. It's happened so fast. The Fed has moved so fast on this, and if the speed in which the Fed is moving on this doesn't scare you, then that's something you need to reconsider. Again, this is not a normal cycle. None of this is normal. You're living through a very historical time. You've been living through a historical time for the past couple of years since the pandemic has started. It has changed the dynamic of the market. 40% of the money is being printed, right? You have to keep saying that, because it's not the same. And so, with all that being said, and you made it this far, I do appreciate you. Go ahead and drop a thumbs up. And until the next one, I will see you guys later.